Everybody, it's Jim Hiles. It is December the 13th. Welcome to Market Monday at First Capital and Go Plan 101. We're talking about the market generally looking back a week. And lo and behold, 2 weeks ago, the world was coming to an end. Last week, we hit all-time highs. So go figure. We had a nice rebound rally. Stocks surged. So we got somewhere around 4% on some of these things. So pretty nice bounce, if you will. VIX fell dramatically during the week, as you could imagine. But there were a couple of reasons for that. Sometimes there are no reasons. It's just a matter of things got on sale and there's no place to go other than trying to buy into the market. The climbing the wall of worry comes to mind. That's a traditional stock market jargon that basically says people are worried, but there's still opportunities. Money's coming into the market. Prices are going up. Everyone has said we're going to have a correction, and it's usually a good sign we're not going to have a correction because people have been wanting to buy back in or use the cash to get in at lower prices. Every time we have a little pullback here, it gets bid back up. So that's probably going to continue. I don't expect that to change much here. So still too much money trying to get in. In terms of what's going on around the world or around the country, I should say, unemployment. I mean, we need more people to go to work. There's so many jobs out there that are available that we can't find enough people. The yield pendulum, I've talked about this before. It's kind of like this extreme one way, extreme the other. You know, we were up 1.7 now to 1.5. I mean, that's huge in the bond market. It's not so big when you look at it. So debt ceiling, guess what? They're going to stay in business. The federal government's going to continue to pay themselves. So we don't have to worry about that drama. Inflation is persisting. We expect this to persist probably throughout next year. You could expect this to continue to be high for a while. Doesn't mean it's going to be high and going to be the 1980s all over again. Oil did sort of come back here a little bit, about $72 a barrel. So we're still down from $85 a barrel. We could go back up. It's hard to say. Based on demand, we're seeing the Britain is basically saying that the UK, I should say, is putting a pause because the Omicron virus is now kicking up there dramatically. We probably could expect to see that here in our country as well. So far, growth is over value year to date, which is kind of surprising. Value was really the one picked to do better this year. But I think the virus has just made growth stocks more vital because they are deemed to be safer. And the reopen trade has a lot to do with what's going on in value stocks. They just haven't reopened yet. We're going to look at the Fed this week. So very exciting conversations around the Fed. Hey, we're going to be looking at doing some year-end tax harvesting this month. So there might be some trades in your accounts for that reason. We're going to try to send out everybody a realized, meaning you've made in gains for the year to get an estimate on what your tax situation might be like. So take a look at that when that comes in an email to you. We'll go ahead and call it here today. If you have any questions, please feel free to give me a call. Thanks. Bye.